All right, thanks everyone for showing up today. I know on the Discord channel it said we talked about cost segregation. I know we covered that earlier in the month, and we were going to change formats to kind of have the last Tuesday of every month be kind of an open forum for tax questions. And also, I don't have my home internet is out. They're doing a road widening project, so I'm on my phone. So if I cut off, I'll join back up. It's just I don't have an internet connection at the moment. So what I'd like to do though is start with a breakout room and have that discussion be focused on how did your 2021 tax season go, or how did the most recent tax filing work for you? Any pros or cons that you want to share with the smaller group, and then with the big group. And then from there, we'll just start answering tax questions, or I can cover cost segregation again on a high level if people have questions on that. So, and then Megan may be able to join a little later today if there's some legal questions, but she couldn't make it at the start. So, Ken, do you want to get everyone in the breakout rooms? Back from the breakout rooms. Does anyone want to discuss what your team or your room spoke about or volunteer to? I'm not seeing any hands because of my cell phone, so just feel free to unmute yourself. We'll go from there. Thanks.
Hey, Pete. It's Charlie.
Hey, Charlie, how are you?
Good. Hi, yeah, I'll make ours simple. What we had. We actually had, there were the four of us in our group today, and most of us, the majority of us actually ended up filing extensions, which was, because for one reason or another, right? But,
yeah,
one of us on the members, actually, Julie, was able to get hers done. Our hats off to her, man. That was awesome. She was able to get it all done and get it out there. But we were talking about the fact that, using in a particular case, she actually was using the software to process it, and then the software wouldn't capture everything she needed, but she was able to still get it filed and get it in on time, which was fantastic. And she talked about the fact that she's trying to keep her structure more simple and clean and well formatted, so she's got good record keeping, which is great. But the other were those of us who did it and filed the extensions. We were like, hey, I wish I had that problem, that only my software didn't work and everything else was easily put together, right? So, but yeah, most of us ended up filing for extensions,
Okay.
But our hats off to Julie, man. She did a fantastic job.
So those extensions were filed due to just organizing your record books and record keeping to do a P&L, or were you also missing maybe like K1s from S Corps that you're members of, or was it kind of a combination?
Yeah, it's kind of a combination of them, because we have something like in my case, I tend to get from two of my investors. They tend to send it really late, what the reports are for the investments, and so that's been going on for years. And I kept asking them, why can't you guys get it out earlier? Because it only comes like the week of or just a few days before it's due, so tends to complicate things, So this year, from this past year made it a lot more complicated. So I just said, we're just going to file extension and we still need to get more of that data in. But so we all ended up with about very similar, circumstances with the K1s. And then one of our other guys, had a K1, but there was an attachment, he said, with a K3 because of investment and energy that ended up having some foreign, requirement stuff on it. So he said, you know what, with respect to that, he wouldn't be getting it until the end of summer. So if that's the case, or closer to summer, then, he might also file the extension, for that. So, it was different things that we experienced, but generally there was pretty much about the fact that the K1s were going to be a little bit of a challenge, as we still just need to work through them, or we didn't have them. and as well as K3s, which is foreign claim stuff. Yeah. So, but that's kind of the, so the majority of us were all file extensions. But hey, great job, Julie.
So yeah, that K3 was kind of new this year too. So I saw a lot of clients say they didn't have their information, or we had to do an extension due to that K3 form. So
yeah, that's crazy.
That's not surprising.
Yeah, exactly. But yeah, so it on top of everything, everybody's saying, oh, you can't file extension. I said, listen, I got to file extension because someone got some stuff in there now, changes that I said we're trying to work through some of these details that make it a little bit more arduous to handle. So, in the past, we always, Julie and I were talking about, and she was sharing with us, sometimes you got enough that you can put it in, file it in, and then do an amendment right after. But in some of these situations, this year made it a little bit more complex. Yeah.
Yeah. And I know a lot of tax advisors, and I would probably agree with them on this, is they say if you are getting K1s or any of that stuff, just file an extension automatically, because some of those could be restated or changed later on throughout the year. So, and that way it avoids you of having to do the amended return. So,
exactly.
As long as you're just paid up on your taxes, an extension's fine, especially given the complexity of getting the K1 with the new K3 and so forth.
Right. Yeah, exactly. Yeah. So needless to say, we're trying to get the rest of our stuff in order now. So that's a good thing.
Yeah. Did that, I wasn't able to make last week's discussion, but on software apps, would any of those apps help you or anyone in the team, you think, get better organized to kind of be able to file on time? Or if you
you guys had a lot of good, there's a lot of good feedback from everybody on apps last week, which I thought was great. I think it's just a question of for everybody's methodology on use on the apps, which one, suffices better for the next. But in particular, for example, I just as an example, like in Julie's case, she said, her formats are more simplified, so she can work with more simplified software to gather what she needs. It's just a question of what detail she needed to get working on stuff like that. But in my case, in some of our other cases, I got some very complex things that we're working on. So looking at more advanced apps, we start talking about stuff like Buildium and stuff like that. They're actually excellent programs for things that I'm working on. So having some of those suggestions, coming from Chris and from you guys and from the rest of the team, I thought was fantastic. So we're researching some new ones to take a look at, seeing what would work good in for the data tracking as well as for interfacing. But
that's good to hear.
I was kind of like you. I was working with apps in the past, and they weren't quite getting what I was getting. So I was excelling everything, right? Just excel, and custom build each one we had, right? But I know that, man, every time somebody would come to me and say, "Hey, this app is fantastic. You got to check this app out." I'm like, "Oh, I didn't know the app could do that." They said, "Yeah, you got to take a look at this one." So I said, I'm still doing everything on Excel, but I said, as long as I can capture the data, and it's simple for us and for associates, that are working on it. I said, then we're able to exchange data pretty, simply. Because in the past, I've had accountants that I've worked with that say, we want you to just use QuickBooks, or we want you to just use, this. And I'm like, wow, it's changing my, my whole format in some cases. I mean, it was okay, but when you're on the move and you're trying to get data tracked and gather information from different sources and have them download into your format, I like what Chris was saying, and the fact that, and what Brandon was saying, the fact that when you get these property managers who need to get your reports over, ideally you would like to be able to get that interface, have something that has an interface in place, and you can download the data right into your new app or your software, right? Otherwise, you got to transpose everything. So, tendency in that, right? Sometimes things get lost, in translation. So, so anyway, it was great. Last week's was great.
Okay, great.
Charlie, Oh, I'm sorry.
Hey,
Go ahead,
brother.
Chris.
No, I was just going to say, I love hearing you talk, Charlie. You're always chock full of experience and ideas, and all those birds I hear in the background just make me feel back on the island.
Yeah, I gotta love. We're babysitting a lovebird and a parakeet right now too. So now we got some new sounds in the background. You know,
There you go. There you
along
go.
with the chickens and the roosters. Yeah, so for everybody who's getting up, hey, but I'm the one who's probably getting up more than anybody else right now. So hey, I
Yeah.
appreciate you guys so much.
Yeah. Now, ever since I started, on my own in 2010, I have not always filed an extension, and I can't see any way that's ever going to change. With multiple entities and with multiple partners, it's just virtually impossible. And I'm okay with that, as long as it's organized and as long as there was a time where it was a bit obnoxious, where I was either vastly overpaying estimated taxes or vastly underpaying.
Right.
That's kind of calmed down a bit. But that's a trap that I don't like getting into, because especially when you overpay, it can take forever for the government to send you money back. So,
well, like they say, right? Quick to take, but slow to give back.
Yeah, very true, very true. Yeah, our group, I don't think we actually even talked about extensions. I'm going to assume everybody did, but we spent a good amount of time on with the new member Cindy. She is in the Army over here in California and is studying languages, but bought her first property. Cindy, correct me if I'm wrong, was it Virginia, West Virginia, or Virginia? I know she's on mute right now, but in any case, I was impressed with her, because so many people who start out call themselves a real estate investor for a long time and never pull the trigger, and she bought a house, so a rental property. So we're all proud of her, and in the limited amount of time trying to discuss it.
Great. Well, that's exciting to hear. Anyone else have any tidbits they want to add, or do we want to kind of step into some tax questions, or maybe talk about the spring season? At least where I live, everyone is doing yard work to their rentals and how to keep track of those receipts.
I got a quick question for you that came up in ours. We were talking a little bit about real estate professional status, and Jeff put his poor wife through real estate courses and to become a realtor. And then that was before he knew he was going to retire the next year. So it got me thinking, and maybe it was more out of curiosity. If you retire, let's say halfway through the year, and you're spending, in a sense, you retire from a W-2 job that has nothing to do with real estate. But then after that, you're full-time in terms of you're retired from full-time work, but now you're just managing rentals and maybe lending money out or something like that. Can you then declare professional status for that whole year, or do you have to wait till the next year, or you'll have to do 750 hours? I guess even if it's half a year, if you can fit in 750 hours, you're fine, right?
Yeah. So it really comes down to always passing those 3 tests. The first test was over half your time spent doing real estate professional activities. What did you spend over that 750 hours? And then did you make management decisions? So you technically
but if it's not half your time, I mean, if it's half your time for half the year, but the other half you had a W-2, is it kind of a gray area, would you say, or?
Well, yeah. So if you worked 6 months at a W-2, if you had vacation time in that W-2, you could theoretically argue you didn't work a full 6 months. You might have only worked 5 months, but been on a job for 6 months. Does that make sense?
It does.
And you could have also been working hours on the weekend or even at night while you were still doing the W-2 that could count towards that 750.
Yeah.
So as long as you had more hours working that you could document through scheduling calendars and so forth than the W-2 job, I think you'd be able to claim it, because you'd meet that first test of over half of your time.
Yeah.
Working time was spent. And then to get that, you would probably be over that 750 hours.
Cool.
I have a question regarding that professional, real estate professional status. Let's say if your rental has positive income, it has profit, does claiming real estate professional turn that passive income into active income, and you end up having to pay self-employment tax and all that?
Yeah, in that instance, the real estate professional designation turns losses or profits into active. So any form of active income, depending on how you're set up, you do pay payroll taxes on. So you would pay that 15.3% in that instance on it.
Wait, really, but not on your passive real estate or rental business. You wouldn't.
Not on the passive, only on the active portion.
But yeah, I guess I was confused by Julie's question. Maybe you understood, Pete. But I mean, Julie, are you saying if you have positive cash flow in your rental business, do you have to pay active income?
Well, it's not really cash flow. It's your profit and loss statement. So let's say you don't have a lot of depreciation, and then on your profit and loss statement, you do not have a loss. You have a profit. In that case, if you claim real estate professional, does that profit still considered passive, or it turn into active because you are active real estate professional?
No, is the short answer.
Okay, so if you have a loss, they let you. But
it's immaterial if you don't have a lot. If you don't have anything to write off from that passive loss, it's immaterial whether you're professional status or not, because you have unless you had losses from prior years.
But if you're a real estate professional with income, that's considered active. But if you had income from a rental, you wouldn't claim that designation. You'd keep it passive.
So
Correct?
every year, so you can switch it on and off depending on that year.
You do not have to claim real estate professional every year or in consecutive years. It can switch.
Well, maybe I need
my
understanding. I mean,
got it.
I have active businesses in real estate, and I have passive businesses in real estate. And each entity is going to determine whether I'm passive or active. My rentals, I'm clearly passive. They're out of state. Yep. I've got my lending business in California that's clearly active. So if I, with those losses, I declare professional status. I got to pay payroll tax on my active business, but my passive rental business has losses that I can write off, against, from what I understand, my active business.
Yeah, so when you claim real estate professional, those losses or profits become active in essence. And usually you claim real estate professional when you have losses because that offsets your active income, so you lower your tax rate. But if your rental has a profit, you would want to keep it passive because then you avoid everything.
That's right. And then you do not want to claim real estate professional on that year.
I am still confused here. If you have a profit, like let's say you have really old properties, you can't appreciate them anymore. They cash flow like crazy. You've got no debt either. Just because there's a profit there has nothing to do whether it's passive or active. So what am I missing here, Pete?
Well, when she claims real estate professional, it turns it active.
She has other.
If that's how she claims it. So I wouldn't claim it. I'd keep it as a passive income so you don't have to pay those taxes on it.
That's right. Because if you do not have a loss, what's the purpose of claiming as real estate professional?
Well, because in my case, I have active businesses and passive businesses.
Correct.
So, if I want to use that loss against my active business. Now, is the only way for you to declare professional status, is your only real estate activity rental properties?
Well, I'm a realtor, so I have active business. So what I'm saying is, if, Chris, your rentals do not have loss, what you gonna do with the profit on your rental? You want to keep them as passive, right?
And they are.
Yeah.
I don't have to look. Yes. Oh, I see what you're saying. Well, then there's no reason. Okay, so here's the disconnect. Whether or not I declare professional status doesn't change the fact that I'm always passive with my rentals and don't have to pay payroll taxes on them. Please tell me otherwise, because
Pete just said it's otherwise. Yeah. Pete just said if you claim real estate professional, it turns that rental profit into active. That's what I understand.
Yeah, I'm going to need that explained to me, because in my circumstance, I don't see how that would apply. But please correct me if I'm wrong, Pete.
Well, passive losses, which would be from your real estate, which in essence would get paper losses because of depreciation. The only way those passive can offset the active income from your other businesses is to claim that real estate professional, because that real estate professional changes that income from a passive activity to an active activity. And that's why the active losses.
Even if I'm not materially participating in in the business, if I have like a partner, for instance, that does all the day-to-day operations, and I'm, interesting. Okay.
Those would stay passive for you if you're not material participating, which you would fill the third question on that. Those three questions that you have to ask.
Right, but okay. Interesting. Okay. I have some questions for my accountant.
Yeah, and again, he may be doing it another way, but just passive income cannot set off active income. But we want to claim real estate professional because usually you have losses due to depreciation, and then you want those losses to offset your active income to lower your active income.
Yeah, mine's a little more confusing. Well, at least it was in the past, where all my properties were very, very old and were already fully depreciated. So it was a kind of a different scenario. And I mean, benefit to me, they were cash flowing like crazy, but didn't have a ton of write-offs, except for, well, we were also putting a ton of work into them. So a lot of expenses per se. But
all that income stayed passive, correct?
Yeah.
Yeah, which is what you'd want in that scenario, because you avoid that payroll taxes then.
Right.
So, and her question is, if she has profit, you want that profit to stay passive, so you wouldn't claim real estate professional designation.
Unless, and hear me out here, if you've got so many business, I'm trying to play this out in my head, where if you've got enough write-offs, you do the Augusta rule, you pay your kids, you just have tons and tons of expenses and write-offs, that in the end you're making it active and you're paying, a 13% payroll tax, but your effective tax rate is still exceptionally low. I don't know. Is there?
Yeah, if you have active losses that can offset that income, then you could choose reps, and then in essence, your active losses from your other business and write-offs could do the reverse of what normally happens and offset that. You could do that approach, yes.
Yeah.
And then depending on how low you can get your income to be from a tax-wise, then it really wouldn't matter if you can get close to zero. So. Yeah.
Living in California, I try to do that as much as possible.
Yes. I would agree.
Pete, I have another question regarding installment sale. My understanding is that if you are a seller, you sell a house on installment sale, then you do not have to pay the capital gain on the year of the sale. You could just defer it. Is that correct?
You're able to report part of the gain for each installment payment. So
each year, yes.
Yeah, I would probably want a little more detail, but could theoretically say this first year was your basis and then have capital gains the rest of the final payments. But usually
Right.
you report a portion based on each installment is usually how I
That's correct.
So.
Right. So if I'm selling a property with installment payment, however, I sell it at a loss, do I get to realize that loss on the first year, or do I also have to spread it out with each installment?
So you're selling at a loss and you're going to recognize a loss.
Yes.
You're asking if you can recognize all 100% in year one?
Yes.
Off the top of my head, I'm going to say probably not, but there might be a way that we're able to.
Okay. Okay.
Because you're also going to have a bigger loss because you're going to have selling commissions and so forth as well, right? Is that what's creating the loss, or?
No, I could just be a capital loss. I bought it for 1 million and I sold it for 900,000. And then I have 100,000 loss. But it's installment, and I maybe profit from the interest rate. So if I
so
sell a property at a loss, do I get to realize that capital gain on the first year to offset my other capital gains?
Yeah. So per publication 537, you can't use installment method to report a loss. So you would recognize the loss in the year you did the sale, the entire loss.
Oh, I could realize, I could report the entire loss on the first year.
Yeah, for losses you have to recognize.
Oh, that sounds good. Thank you.
Yeah, you can also choose to report all of your gain in the year of sale as well.
Oh, really? Okay,
yeah.
I guess nobody would want to report that because then your capital gain.
It depends on your other tax situation that you
That's
may
right.
want to. So,
that's right. Yeah. Yeah.
But yeah, that's publication 537.
537. So, okay. Thank you.
Yeah. Mm-hmm.
Interesting. So you could report the whole gain, even though maybe, I mean, especially if the installment sales for a number of years, even if you haven't received enough money in the first year to be a gain.
Yeah, per the website, you're able to, if you choose to. Most people would not, but
no, but I can see you're right. I mean, like if you knew your income for that year was going to be much much lower than in future years, it might be a good arbitrage play for effective tax rates.
Correct. You know, and then if the installment sale goes bad in year 2 or 3, I'm sure you would be able to write off the losses that kind of maybe partially offset that gain. But
then, like, why would you do the installment? I guess because if that's the only way you can sell it is an installment sale, even if it's a loss or a gain, that's why you would do it. But not the typical reason you do it in an installment sale.
Correct.
Not a typical case, but maybe when you do the installment sale as a seller and you are charging a high interest rate on that installment payment, and maybe you have an option to buy it back later. So if you sell it at a loss, you could use that loss to offset other gains.
Oh, I love creativity like this.
Yeah.
Just be careful if it's not a financial friend wink wink thing, or happen too often. But
well, yeah, of course, yeah. But
and then what state is it in? Is it what's your high interest rate? Is it considered usury? All that fun stuff you want to kind of look into.
That's right. That's right. Yeah.
Because most people do the installment sale to lower their tax gain for that year. So it's a little opposite.
This is interesting. You got me thinking.
Okay, thank you.
like this idea.
Has anyone done that before, or is this all kind of an installment loss sell?
What made you think of this, Julie?
Oh, I have another one. You want to hear?
Of course I do.
Okay, so if I bought a house for 1 million, and then I turn around, I bought a house for 1 million and I did an installment sale, so I'm not paying that 1 million in that year. So I gave the seller a mortgage. And then I turn around, I sold that house for 900,000. And I walked the mortgage to another property that I own. So now I could realize 100 grand loss, capital loss on that year to offset other gains. At the same time, I kept a finance. I walked that mortgage to another property. So for the first year, right away, I got 900,000 cash, right? Because I sold it for 900,000. But I don't have to pay the seller 1 million because that's an installment sale. So not only I got 900,000 cash right away, but also I get a capital loss of 100 grand. Okay,
so you bought a property with a mortgage on it for $1 million.
No, not with a mortgage. It's let's say it's free and clear. I bought it and I pay the seller with installment payment.
Okay.
I agreed to pay the seller with installment payment. And instead of giving that property as collateral, I give him my own house as collateral. So that 1 million house I bought is free and clear for me as well. And then I turn around and I sold it for 900,000. So now I have 100,000 capital loss on that transaction.
So the question I have for you, because I love being really creative. The question is, what would that property really have only sold for 900 grand? I mean, if I'm playing the IRS and I'm looking at this, is it a scheme? Is it really that she did this right from the beginning with this purpose?
Right. Okay. So
why would any rational person pay $1 million for something and then immediately turn around and sell it for 900 grand if it weren't for this?
Well, that's a good question. It doesn't have to be 100 grand difference. It could be just 50 grand difference. And you could say, you know what, I just couldn't sell that property for that price. Market turned, interest rate goes up for whatever, as long as it's not too big of a loss. And as long as you have the comps or whatever to support your sale. And then I'm just giving that as an example that you could get 900,000 cash right away. And you realize 100,000 loss as a capital loss to offset other income. At the same time, you kept the finance.
How much time difference are we talking here since when you bought it and resold?
Doesn't really matter. That's my thought. Pete, do you see any
but the short-term capital loss?
Yeah.
Do you
see any problem?
Are you offsetting other capital
strategy?
gains?
Yeah, let's say I have a stock gains. Can I offset
short-term or long-term?
No, if I have short-term stock gains, and then my real estate is also a short-term capital loss.
So yeah, your short-term loss would offset your short-term gains first. Mm-hmm. Then if there's any left over, that you could apply that to your long-term.
Yeah.
But you wouldn't be able to put that against any active income.
Yeah, no, that's a capital gain and capital loss offset. Yeah.
So you're in essence you're manufacturing a loss off that stock gains.
Yes.
Which
Interesting.
it might, because then you still own the $1 million house then? I guess that's where I'm
I sold it.
I'm not tracking.
No,
So
I
you
sold
sold the
it.
$1 million.
So I bought for $1 million. I sold for 900,000. I don't own that house anymore.
Yeah. And then that 100,000 loss, you get to sell 100,000 in capital gain stocks, and then you're going to be back at $1 million. Is that kind of the idea?
So that 100,000 loss from the sale of real estate can offset my capital gain from stock market.
Mm-hmm.
Does that work?
I think what Pete's asking is like, why did you do this? I mean, is it because
Why?
I mean, he said it's a high interest rate, and I mean, over time, just trying to think here. Yeah, because you didn't lose $100,000. I mean, because it's an installment sale. Well, the original was an installment sale, and then you sell it at $100,000. Okay, I guess I'm getting lost a little bit.
Well, so I sold it for cash. Why would I do it? Because I got the finance. It might be a 0% interest rate installment payment. So I get
But you still owe the original guy $1 million, right?
I still owe him $1 million, but I'm gonna pay him in 30 years. So my benefit is coming from the finance.
$100,000 write off, and then you have good finance
right, and then I get the tax benefit to offset the other gain.
Right. And then did you say and you got cash? You got 900 cash.
I got cash, exactly.
Of which, interesting. You could do whatever you want.
Then that's the rub of doing the break even, because the interest on that 900 is why you're doing the deal.
Yeah, what kind of rate are you paying on the mailing I mean, is it a good low interest rate?
It could be 0 interest rate.
Yes.
It depends on how you negotiate.
It could be
with the
negative
seller,
interest.
right?
I mean, it could be any. I mean, there's a lot of different things.
Absolutely. It depends on the term. If the seller is too greedy, ask for 10%. I won't do the deal. But
that's why I'm asking. What did you get?
I mean, I want to get 0 only if it's 0 interest rate or less than 3. I will keep that finance.
Okay.
Less than 3, you said?
Well, I hope you guys like
So
it.
when you, at the end of the day, your $1 million installments with interest, when you pay in 30 years, what's that add up to?
Pete, I don't really care what it add up, because the future payment is worth a lot less, right? So
it's an arbitrage of what you put that 900
Correct.
To work at. And did you have something in mind to put that 900 to work?
Well, I could buy another rental property that has a good cash flow.
Yeah, and then you can use that cash flow to make those payments.
Yeah.
Yep.
That first, and take the and arbitrage, take the difference.
Yeah, absolutely. Yeah.
That's what I'm just curious, because if your installment's 1.4 million, but the 900,000 you're able to turn into like 1.8 through investments. Yeah. So that's why I was asking about that.
Yeah.
Yeah. No,
go ahead.
The arbitrage, I mean, that's really all you're doing on that. So
yeah.
I like it. My biggest issue with things like this is that and I usually hear about things like this, and it's a smaller gain, and it's not necessarily repeatable. I mean, you could repeat this, but I wouldn't repeat it too often, because then it really looks suspicious. But even a one-off to have 900 grand cash to play with.
You don't have to do it too often. Like once a year, it'll be awesome.
Huh. Interesting. Well, you got me thinking.
Yeah. No,
okay, I have to go, guys. Thank
it's
you.
a high
for
level
the discussion.
arbitrage. Yeah.
Okay.
No, thanks for showing up today and sharing that.
Okay. Bye.
See you, Julie.
Thank you.
So I have a question.
The other issue with that approach was she was
Okay.
putting that loan not on the property, but on her primary residence. So you're really putting your primary residence, whatever accumulated equity you have there, you have to assume you have $1 million to cover it, right?
Yeah.
Depending on if you want to do that.
Yeah, I would have to see it on paper to get a total.
I don't know how you
Detailed
find a
understanding.
property where you sell it for less than you bought it in this market where what did prices go up across the U.S. 15 to 20% last year? It's kind of tough to
Yeah.
pull off.
When I know people here where I live in Boise, we're about 10 months out on houses being built.
Yeah.
So people will drop 20 grand on a lot.
But
And
essentially,
they won't have-
it's maybe a more complicated way of just doing a HELOC. If you need to free up cash and you've got equity in your primary residence, you could use it as equity and do this thing that Julie did, or you could go off.
The problem with that, and I was thinking that too, is that with interest rates going up, to be able to lock a low interest rate over 30 years, which
Right.
with the HELOC is pretty intriguing.
Yeah. So if you go, that's, I guess, the other opportunity. If you can find somebody who wants to sell and is willing to finance it for 30 years, which is kind of an interesting thing, be able to find a seller that'd be willing to wait 30 years to get all their money, who can just offer you a killer interest rate that gives you access to interest rates you might not be able to get on the open market.
Yeah. But I guess I don't know a seller that's going to give an interest rate.
This
Well,
precisely.
but she may have overpaid, right? She's basically saying that perhaps she paid $1 million for a $900,000 house. So the seller's like, I'll give you a 0% interest rate if you pay me $100,000 more than my house is worth.
Right. I mean, there are some people that are so stuck on the price they sell it at that they just don't understand the numbers. And you could practically get, all right, I'll give you that, but this is going to be my payment, and it ends up equaling zero.
Yeah.
Interest rate. I mean, I'd love to get it. I hear people who've done it. I have. My issue is when you look at the loss, when you look at the low interest rate, it could be 100% legitimate, but it's just, you get one auditor to kind of look at that, and it's like, that seems a bit fishy that you're able to, why would you sell at a loss? B, you're getting maybe a high interest rate on what you put that into, and then C, the low interest rate you're paying on the original or the second purchase. So there's a lot of things in there. I love creative, and I don't mind being in that gray area, but it's not necessarily repeatable on a long-term basis, and it's kind of a little bit fishy.
I just couldn't get it out of my head that the seller would be incentivized to take payments for the next 30 years versus selling it out for a certain price, right?
If it makes you feel any better, Alex, I mean, the sale point is just like, where are you going to put the money? Well, I'm going to be putting, a lot of other people, they don't trust stock market. They want to put it in the bank. Well, you can have that conversation with them. Well, how about you be the bank? Your collateral is something you lived in for 30 years and you know it. So if I don't perform, you're getting your house back, and you're getting a 10 times higher interest rate than you would be getting it just by sticking it in the bank. And some people, it's the same kind of person who wants an annuity. They get a constant monthly payment on something they just never have to worry about. So yeah, when you're surrounded by real estate investors, it's like, who would ever accept that? But a lot of average people, they don't want the hassle. They're happy they're getting something higher than they would in the bank, and they're happy that their collateral is a property and location they know very well. Did I sell it well?
I just can't get over it.
I hear you.
On the other side.
Yeah.
For the seller.
Look, I've tried it a couple of times, and I agree with you. It's an option, but it's one that a lot of gurus like to talk about a lot. But financing is always something. It's like a question everybody should ask when you buy a property from somebody. It's like, if you've developed a relationship with them, it's like, what are you going to do with the money?
Yeah.
Because owner financing, not having it on your record, not having to do with your credit and, having things subject to or owner financing is a benefit. And too many people are too afraid to ask the seller. Why not?
I understand all that part, but I'm just thinking, to connect with that seller that would accept that type of a term.
Yeah.
It's got to be somebody that's you have a relationship with. And so now I'm thinking, well, I have a sister owns 2 homes. She's ready to exit. She's operating adult family home and she's fine financially, right? And I say, okay, let me think about this. Does it really make sense to get this payment? Because she doesn't really, would she do it given her situation, knowing what I know about her? I just can't figure out a way how to incentivize her to take monthly payments over 30 years too long, right? I mean, there's got to be some period. It says, okay, cash me out in the next 5-10 years, maybe that.
Isn't the other thing, and maybe Pete can chime in, isn't the other thing when people do this installment sell, they're not realizing that capital gain all in one point. They're realizing over that time. So their tax obligation is much lower. Is that right, Pete? Isn't that one of the advantages?
Yes.
Yes. Yes. So the installment sale, you could choose the gain all in 1 year, but most people do it over the life of the installment sale.
So Alex,
A portion
that's
of
the
it.
thing,
So I
right?
understood that.
So
Yeah, so I
instead of
understood that to be the
$1
case.
million over, whatever, 1 year and having that be 50% tax bracket, yada, 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 somebody gets it over 30 years. That's $30,000 a year paid at whatever the tax bracket is, 12% instead of 40%. So
Yeah. If she's financially in a good position, then maybe that your angle with her is the tax benefit. Assuming.
Well, that's where my mind is taking me, that there must be something there that would incentivize her to make sense, right?
There's another thing too. Now you want to buy the property from her? Is that what you said?
Well, actually, there's not so much for me. It could be my son, it could be my daughter, and it could be my nephew, right?
Okay, so you want to buy, you or somebody you control wants to buy the property from her.
Yeah, it's just that, back to the Augusta rule, right? So there are these very creative things to do it. You could justify it and work it right, and it benefits them. So
Yeah.
I'm looking for, this is a home where we grow up in, but they operate 2 adult family home, half an acre. I mean, actually, you can short plat the property to 3 properties, valuable property, but for what it's worth today, should be willing to work out some sort of a payment arrangement with one of the nephews. That's what kind of triggered my thinking. I said, does it really work? Because she really doesn't, she wants to help them get a house, but they can't qualify to get it cashed out. So she's willing to carry it for a little bit. At least that's what she related to me. So when Julie said an installment payment over time, I mean, what would incentivize her? And Jeff, back to your point, the tax implication, right? So here's another wrinkle to this. That property actually belongs to my parents. My dad passed away. My mom is still there. They worked out a deal. So she's taking care of them all these years. But when she passes, that situation happens. And she's got that all work out with her attorney. That she reversed. That's why she doesn't want to do anything until my mom,
Alex, is this in the United States?
This is in the US. It's in.
Oh, okay.
Yeah.
Excuse me for being particular here, but
No worries. I'm just
How long ago
trying
did
to
that
relate to what Julie brought to the table, and so can that really work?
Well, I'm trying to figure out what her basis is. I mean, because if your parents recently
Significant.
passed,
Yeah,
What's
it's
that?
a very significant amount. That the home is probably somewhere around, by the time they made the deal, was somewhere around 350, but the home is worth over $1 million now.
okay, so you guys inherited the house.
Not me, my sister. Yeah, she will.
So she
She will
inherited.
inherit once my
Her
mom.
basis is around 350 and it's worth about $1 million. Is that what you're saying?
Yeah.
Have you explored 1031ing with her? I mean, so that she, well,
I haven't had those discussions with her, but
it sounds like, well, another thing too to keep in mind is that I don't know what your relationship was with her. If it's positive, she can be a little bit difficult, but you
It's
got also
positive,
be
it's
careful
good.
too. What's
Yeah.
that?
It's
It's what?
positive. It's good. It's if I do it, it's to help her. We have good relationship. Our family is really tight knit. So
Got
back to when I brought out the Augusta rule, right? It's because they have this, can they benefit from it? And so I'm looking at it the same way for my sister, because eventually she'll.
Well, I mean,
It's
have
at
you
home.
considered whatever plan you have for it, the other option is to have her as a partner.
Right.
And it's in whatever share, that you guys agree upon, that she would get a part of it. So that could be a benefit.
And check this out. That home is an adult family home. So it's got cash flow. It's got enough cushion to cash flow it. So she's even tried to offer that to one of the caregivers and says, hey, if you're interested, I can have you, buy the business and it's cash flowing for the next 2 years, but she needs to lease out the property, right? That's all like I said, she's not.
You could have where she becomes the lender, gets a preferred return, but also gets a small percentage of any business that's run on the property too.
Yeah.
That's how I do some of my fix and flip deals where I'm loaning the money, is that I get a guaranteed return then plus a certain percentage of the profit on resale. But that can also work for if it's an active ongoing business.
So the situation is that these are 2 properties, both of them are adult family home. And the K2, the one I'm referring to you, is she's willing to be very flexible with my nephews and nieces, right? In terms of they can't afford it, fine. You can just make payments until you can afford it. It's sort of like that kind of a deal, right?
Okay, now I'm a little confused. So you're saying that the families live in the house?
It's an adult family home.
Oh, I'm thinking like a senior living kind of situation.
It is. This is an assisted living where you take care
of.
Oh,
so these nieces and nephews, we're talking about elderly people. We're not.
No, the nephew is young. The home is an adult family home, so it's got patients in there. It's creating business. It's got cash flow.
Is the nephew a part owner? You see, this is where I'm losing you. What does the nephew have to do with this?
The nephew is interested, and the nephew sort of help around the house to help some of the garden work and the rest of it, but he doesn't work directly in the adult family home. My sister just wants to help them, own a home, I suppose.
Okay, so what you're proposing is that your nephews would own. Now, nephew, that means that's not her kids.
No, it's not
okay.
her kids.
Got it. So you want some of your nephews, nieces, whatever, to potentially buy the property from her, and then she gets, in your mind, the best of a situation would be some kind of installment sale or some kind of payments.
That was it. I was trying to incorporate what we just learned from Julie.
Did he have any experience doing this? If his experience right now was gardening on the property, do you think he could run a business in owning this property?
He can. Yeah. That's not. Yeah, that's not hard because there's already an aid. Basically taking care of the patient. So it's ongoing turnkey business. It's operating. All right. So she doesn't have to necessarily run that himself. But the point is that if he's just interested on the property, the home, because it's got the underlying value because you can short butt it into 3 properties, right? So
I'm sorry, I didn't hear that. 1 to 3 properties? You can.
The property is large. It's over half an acre. And then it's the city of Kenmore, so allows you to short blood it to 3 properties.
Oh,
yeah. So it's a valuable piece of property.
Okay. Interesting. The other option too is not to sell it at all and just to keep it in the family and not have to incur any of those costs. But you create an LLC or some kind of, something where. Well, you deed the property into a land trust, and then the beneficial interest of the land trust is something that you all have ownership into. You know what? You just need to talk to her more to see what she needs. It's her property. So, whatever benefit she needs, and whether it's purely to help out the cousins or the nephews, well, that's one thing. Then what does she want from it? Yeah. So and then are you truly benevolent in this? Or did you want? Look, you deserve some, benefit for your time that you're going to put into this. So is that going to be a one-time payment, or is that going to be helping with the ongoing business?
It's just in my thought around it is, if there was a way to make that transaction move forward, based on what Julie said and all that stuff, right? And it doesn't necessarily have to be my nephew. It could be my daughter, right? That I could work a deal out with my sister, right? And do it this way.
So why are we involving the kids? I'm going full circle here.
Oh,
I'm saying, or it could be this person or that person. Are you mean
because
are you
I'd love
as a surrogate for you, or
I'd love to have them to have a home. It's really expensive. It's tough for them, those millennials, to own a home here in Seattle. It's very expensive.
Yeah.
And currently they don't have a home. They have a family. They have 3 kids. So they moved to Nashville. I'd like to bring him back home to Seattle.
What did you call the property? An adult living? What did you call it?
It's an adult family home. So basically it's an adult assisted living.
Okay.
So you have basically geriatric care,
Yeah.
elderly people that lives in a home. It's like a nursing home, except you do this inside a home. It's more.
Right. And that's what I thought it was. But then when you started bringing up the kids and they haven't owned a home, so I was like, are they living there, or they're just running a business from there? So I was getting kind of mixed messages there.
Yeah.
Okay. So how old are they? Are they young? Are they in their 20s? Are they in the teens? Are they 30s? The nephew.
Which one? My nephew? My nephews are in their 30s.
Did they express an interest in wanting to run a business? I mean, you know as well as I do, not everybody's built to be an entrepreneur.
It's not so much running that business. It's the house, owning the house, right? Owning the property. The fact that it's currently an adult family home.
This is in Seattle?
Huh?
This is in Seattle?
This is in Seattle, correct.
Because there's a whole nother, I mean, I was originally going to say if it were anywhere else but Seattle, that, why even put it in their name, have them, inherit it from you guys, because then they can get a step up in basis and you could still have them in on the business making money. But you're in Seattle, and I don't know. I mean, if there's one thing I know about Seattle is that it has its own death taxes that other parts of the country don't have, that you got to keep in mind, inheritance tax.
Right.
So you may want to hold off on having them have any ownership until later, because of that.
Yeah, and I believe that very point is part of the reason why my sister is holding off not doing anything with the property, because there's a transfer, and I think she's prepared the legal document to basically address that issue that you just brought up.
Okay.
And then to avoid probate and the rest of it, right?
Now, is this a property that she owns outright, or that you?
She worked out a deal with my parents, and this has been going on for a long, long time. That because this is an adult family home, she's managed to essentially work out a deal with them for the 2 properties. And for as long as they live, they can live there, they can do whatever, right? And there's no change of ownership.
She lives there.
My mom still lives there.
Your mom still lives there.
Yeah,
okay.
we have 2 homes there. Yeah.
Okay, it's starting to make more sense to me now.
Yeah.
Okay.
So it's really just a family situation where I'm trying to, based on what Julie had brought up, is that.
But your sister, in terms of her, who owns the property now?
It's still my parent, right?
Oh, okay. So your parents own it.
My mom, because my dad passed away, right?
Got it. So your mom owns it, 100% ownership, right?
Yes.
LLC, personal name?
Personal.
Okay. Who will both of you inherit the property, or was she only at this point? And I know anything changed. How's it set up right now?
Yeah, so she's the oldest of all the siblings. There's 10 of us, but she's the one that's taking care of my parents. She's the one that's running the adult family home. She's the one that's providing them some financial assistance.
This is your long way of telling me that she will be the sole owner?
Yeah, and I have no issue with it. Yeah.
Okay. Yeah. No, I'm just trying to feel it out and
right.
See. I mean, if her interest is, does she want the nephews to own it rather than her?
Well, from her perspective,
and have it. She hasn't inherited it yet. You could change the will to where it goes directly to them instead. That's an option, and then you don't have to worry about a double transfer tax if that's what she wants eventually anyway. You could even do that in a way where they inherit it and she still has some measure of control. There's so many different ways to do this, right. But you started this conversation with installment sale.
Right.
So that's where I'm.
Because, if that was just an installment or payment of sort, whether it's my daughter or my nephews, can afford that, right? But they cannot afford to buy the house outright. They just are not financeable. They don't have the down payment, let's just say.
Well, I mean, that can be easily resolved with a third party or you or whoever with the down payment. And, you know, that could be worked out. Would be the first time a parent is helped out with the buying of a first home. But this is an investment property. They wouldn't be living there.
Correct. When you say they, who are you referring to?
Yeah, because
My
nephew, your daughter.
You would live there. They would buy in order to live there and make it their primary home, right? Because currently they don't have a home.
So then the business would go away.
And the business would eventually, right, exactly. That was the point, right? So they weren't really focused on the business, they were focused on the real estate. But the fact that there's a business and it's turnkey, there's somebody that's taking care of the patient for the time being, that income can be generated until in that situation, usually they have.
Is it a mixed use area?
No.
Well, it's not mixed use. How can they change it over to a primary?
It's a residential property. That's
what am I saying? Oh, it's zoned so that I see. It's residential, but you can have that family home. But you also mentioned that you could parcel out the land, and the land is what's really where most of the value is, right?
Yes.
So split it into 3 lots or 2 lots or whatever, and maybe build another property that they can live in and still maintain the business.
Oh, it's huge on the, the post sale, whoever will take that over and do those type of development for highest and best use. And the city itself, it's actually the city of Kenmore allows for ADU, additional dwelling unit. So that.
You know what I would do? I mean, is it a good business? I mean, is it really cash flowing? Has it been for years?
The adult family home?
Yeah.
Yeah. I mean, it's got like 20 grand a month.
Awesome gift to your nephew and your daughter would be to build out 2 additional buildings, well, not just houses, but adult living houses, but construct it with a living quarters for their family, for them as part of the house. Well, how many beds did you say it was?
4 bedrooms.
4 bedrooms? I mean, you could conceivably, well, I don't know. I mean, every county is different, but I mean, if
it's licensed to have 5 patients. And yeah.
I mean, you can make it, well, if you're building a house, I mean, you can do anything you want. I mean, is it even better to do like 1/3, like keep the property on as little as you can, and then split it out, maybe just to one other large lot, and then, or add on to the current house and add more bedrooms. I don't know what it's zoned for, or how many, but then you split out the lots and do as many as you can, but also have it where there's living quarters for your nephew or your daughter too, if they want to have a place to live. I mean, the most expensive thing, is usually the property, and I'm assuming most of the $1 million worth right now is in
the property.
Is the land?
It's the land, yeah, not the building. Correct.
Well, then build a couple more. I mean, and you're talking about how easy it is to subdivide. I'd split it up.
The average home here in Seattle is the median home is over $1 million.
Yeah, I would. I mean, if you've got the land and you've got the county behind you and you've got a successful business, you need to find a way to increase that business and give them a place to live. And that's what I would do.
Yeah. And it was really along those lines, Chris. I was looking at it. Highest and best use for the land, and then since it's a family affair, there's not really the seller. My sister doesn't really. She's financially, independent. She doesn't need additional income to make the sale, so she's fine. But she wants exit, right? She's in her 70s. She doesn't want to be tied to the adult family home. She just wants to get it done, retire, and enjoy life, travel.
Well, yeah. Then the best thing, I mean, and the best thing for you or for the nephew, I mean, is to have a loan. I mean, if you've got a successful business on there that's spitting out income, I mean, in a sense, they're buying the business. I mean, who's getting the income from this right now?
So currently, it's an adult family home with cash flow, right? So that's the business.
And your mom owns it, so she's getting the cash flow, or do you have
Well, my sister really owns the business and she's operating the business.
Your sister is.
Correct.
And I think,
By the way, my sister is a nurse practitioner.
but she wants out. So
But she wants out, correct.
So she doesn't want to be involved in the business anymore.
Well, she wants to retire. She's been doing this for a long time.
Well, that opens up another question. If she ran it and it's a successful business, and this is really important to think about, can this business be successful without her?
Absolutely.
Well, I can't. I mean, do you have any experience with does your daughter or nephew or anybody have?
Yeah, we have access to that. My family is in the medical healthcare, so my wife runs a nursing agency, so we have access to nurses and home care aide and the rest of that. So,
do you know what she wants from this? I mean, ideally, she just wants it sold and just to take the money, or does she want? I mean, is she open to the idea of monthly payments? Have you breached this conversation with her?
I have not. That's why that's why that gets engendered from that idea, right? And just say, okay, here's the situation, and I just want to help my family, right?
So I'm going to assume that she feels the same way as you do.
Yes.
This is about family, and and she's financially independent, so she doesn't need the money. She just wants to, well, if she retires, she's not going to have the income from this anymore. So you should say she's financially independent, but is she financially independent because of the income from this property, of which she's going to have to find some, okay, you're shaking your head no, so I'm assuming that's not the case.
She has a business, she has other income, she has many patients, and the other home is also an adult family home, and they're, cash flowing about 30,000 a month. Just one of the homes.
Yeah, interesting. Well, then it's really not about, it's more about you coming up with a good plan and expressing to her and sure how it's going to benefit the family than it is about her selling and being out. I mean,
that's correct. I mean, to your point, right? So the highest and best use for the property, we know the property is large enough and we know how it can be zoned. So if you develop it, it's going to be a lot more valuable if you could do the short plot and then build on that, right? And that's for the land itself. For the business, for the time being, while you're going through getting your permits and so on, you got cash flow ready. That's not your core plan, but at least you have income coming through. And if that's the case, but since she's the one to be out, somebody has to step in, whether it's my nephew, my daughter, can say, okay, here's the plan. Here's how we're going to acquire it, but they have another plan to develop it. I guess that's.
I love it. I mean, you got huge economies of scale there too with, they're right next door to each other. You could share the same nurses, share the same, director or somebody who's overlooking it all. You could, if you're creating the two residents, it could even be something where whoever's looking over it might have, saddle's expensive. I mean, you could have it where the management is on site.
Yeah.
24/7 because they actually have their own quarters there.
Yeah. So check this out, Chris, right? So these are two adjacent properties. They're a little over half an acre each. Both of them together, it's over an acre. They literally occupy half a block. And
you love both?
Yeah, between the two homes. I mean, you literally walk the one block, you occupy one half block. I mean, these are large properties. And when I talked to the surveyor, because I was trying to help her and said, look, if she was going to sell it from somebody from the outside, I was going to stop her. I was going to say, okay, wait a minute, make sure you understand. So that's why I put the effort to help her. And so I got a surveyor to do that. And I got a bid exactly to do that. And he just said to me, he says, look, Alex, if I'm going to do this, I might as well do the whole property, both of them, since I'm going to be doing it right away. So immediately, just that investment alone, the bid I got was like 80,000 to do the short plot, right, for this thing. But that's just for one property. But you could see just that one move alone can drastically change the valuation of the property and the potential of it.
Alex, I apologize for repeating myself, but how many beds are you allowed to do in the county per property?
On the adult family home, you can get licensed for 6, but for the most part, 5 maximum.
Okay. Can you do 6, but have one of them not be part of the long-term care, but more somebody's living there?
Oh yeah, I mean the home is the home actually is the primary home. The first home, we call it K1, is a big home. Right. No problem for the caregiver where they need to stay.
The future is going for. The baby boomers are getting older. You're going to have zero problems keeping it busy.
Yeah.
And I would bet you would get, I mean, I would even look into the county and see if you can get some kind of incentives, because they are just searching, I mean, nationwide more and more for facilities like this.
Yeah, absolutely.
You might get some really great tax benefits or a really low cost loan to build this out. You might want to have a talk with your sister about keeping her on until you get those tax benefits, just because it's showing successful business with the same person in charge, to do that. And then, but have a plan with her on how to get her out.
Yeah, I'm glad we had this discussion, because, it's one of those things you just go to the top of mind when the situation comes up. They got triggered today. And of course, this discussion kind of forces me, because there's so much that we know, right, that we've covered, that given that type of asset, that kind of situation with the family, that the highest and best use, what sort of deal structure, the fact that she wants to exit out, she's not really financially strained, she doesn't need the money, but she would like to exit. So coming up with the right solution.
Does she live there too? And I'm sorry if I'm repeating myself. Does she still live there? Right? Does she live there?
She still lives there now.
Is she gonna want
the main house? I'm sorry?
You gonna want to continue to live in that house?
I think the main house, she'll continue to operate that as an adult family home for the time being, but she really wants to retire.
But that's what I'm saying, is when she retires, does she want to continue to live there?
She could, or she could, she can.
Yeah, places also. Okay. I mean,
that would not be an issue for her, where she can, she can afford it. They're really, between her and her husband, they're financially,
they're well off.
They're well off, I guess.
Yeah. I mean, look, this is a great opportunity. I mean, for your family. And I think put some structure around it before you talk to her, and then go talk to her and let her do most of the talking. Find out it is what she wants. I mean, this is hers. This is her baby. And if she's really
open, Chris. I mean, in my family, there's 10 siblings, right? She's our eldest girl, and then followed by my brother and so on. And I'm number 5, but I'm the one that's sort of focused on the business. In fact, I was the one who really started the whole family to go into the adult family home business. So we've been in the adult family home business and clinics the rest of that for all these years. But she's also the eldest. She's the one that took care of my parents. And she's the one that was able to leverage my parents' home to convert that to adult family home, the primary home. And then they end up buying the neighbor's home when they retired. So that's why they end up owning the 2 homes and then operate as adult family home.
Has she, another thing you might want to bring up with her is where you keep it as a business, you bring the family in, you expand it, but she gets to retire from doing this. Does she do this full time? I mean, is this her only thing?
No, because like I said, she's a nurse practitioner, so she actually has lots of geriatric patients that she goes house call
facilities.
Yeah, she's like the primary physician for them. Yeah.
Yeah.
Hey, you give it.
My wife is a physician. She just in the other room heard this and she said no understood.
Yeah.
How about? I mean,
hey, you're giving me some ideas there, and you're right. But she doesn't know.
I was just saying, could you do this part time, just kind of like as a medical director and overseer?
Exactly, become a medical director.
Mostly retire, travel.
Yeah.
Or maybe even do this with a partner. Get another nurse practitioner, and they trade off. So one can go travel and the other's there, and you expand it, and it's constant income. But she doesn't need it.
I tell you what.
Are either your nephew or your daughter, are they in the medical field?
No, but they are familiar with it because they've been around it. Let's put it that way. My daughter.
But you're going to need somebody that replaces your sister. You need a medical professional on staff.
So my
to pay for it through teeth, or ideally you would have a family member that has an interest in the company succeeding and doesn't have to take a huge.
So my other sister is also in the medical field. She's actually the manager for the adult family home. My younger
sister.
Yeah, and we all, it's a very tight family. So
it sounds like this is something you could easily work out with her if she is family oriented as you are, which she is, I can tell, and she has no need for income, then it's really just coming up with a really good plan
With a good
that's
plan.
good for the family.
Yeah, yeah. And then you got me to really think it through now, seriously, because it's one of those that's gonna happen, right? My mom triggers it. She's in her 90s, and actually she's requiring 24/7 care. She's made provision for all these years to get that all prep. And she now has this property, but she also wants to retire. She's in that situation. That's why she has a willingness to help. But if another plan can be put in place that would enable to maintain the best for all the properties, continue with something, have it managed, she can oversee it, generate income, that would be the best scenario.
Alex, I don't know the answer to this, but I would certainly look into this. If you don't, is the whole Seattle with the transfer, estate tax that's separate from the whole other country. Right. I don't know how onerous that is, but I do have friends from that area that have transferred a lot of assets out of their name into their kids' names early because it was going to be so onerous. Mm-hmm. That is something you need to look into. Mm-hmm. Because it might be beneficial to have that transferred out of your mom's name mm-hmm. earlier rather than later, so you're not dealing with a significant tax hit. Above, yeah, and you're right. Thank you, Chris, for taking the time. And then I know we have some people here listening to this. This is one of those scenarios, right? And like I said last week, I shared with you my other sister, my brother-in-law, who runs his business, and they've got this big yacht, right? That's just sitting there. But it is that kind of a situation. But you made me really think that, I need to really give it some serious thought and put some sort of a structure that would help everybody. Yeah.
Would help her.
Well, that's tax efficient, helps out the family, and makes the most sense to everybody. And if her desire is not necessarily the income from that or to get the cash from that, then it's really just coming up with a good plan ahead of time. That's great for the family. Yeah,
and in fact, I would like my daughter, the personal part of me wants to bring them back home, and my 3 grandchildren. They moved to Nashville. Primarily for that, because it's very expensive here. They wanted their independence. They figured they go to Nashville, they'll have a better chance in buying their own home. But they love Seattle.
It's full. It's 1 acre if you include both properties. Yeah. Is that what you said? Yeah. Okay.
Yeah.
Okay. So, and then does your sister get both?
She's going to get both. Yeah. When my mom.
And you're okay with this? Why?
We're okay because she's been there.
I know you told me why, and I'm sure there's other reasons and things. You've got a lot of siblings,
and they worked out a deal years ago when my dad was alive.
Got it.
Yeah,
got it. But it sounds like are you the only one of the? Is it 5 siblings?
There are 10 of us.
Oh wow! Yeah. Are any of the other ones involved in real estate, or is it predominantly you? Or
yes, my younger brother, I lost him on COVID. He was only 56 years old last year, September. He was an attorney and real estate, Chris. We're still, can't believe it.
I'm so sorry, man.
Yeah. Anyway, I appreciate all this. And then, but one thing for sure though, thanks to Julie bringing that up, because he just sort of brought this home, and this discussion made me really think seriously that I'm the one that can probably play that role because I know more than any of my siblings. And if I don't do that, then that's something that we don't know what will happen.
Well, it's a few things. One, you're at the whim of the city, or of how much you're going to get taxed if you do nothing. And then, it sounds like that's a lot of siblings. In one way, it's actually good that she's the one who's inheriting it, because if it's all 10 of you, that can get very convoluted. I know plenty of people where that's.
My wife just went through that. There were 8 of them.
Yeah.
Passed away. It took them over a year to clear probate. Yeah.
But, unless you can acquire land and properties around that property, that would be less than building, which I don't think is the case at this point now, although it was not too long ago. Your value is in that land. I would build it out, and that's a business that's only going up.
Yeah.
If long as you feel like you can staff it and you can get it running, but are you going to do it?
No, I don't want to
Who is?
run adult family home, but just like what
So
I've
who
done
is after
for,
your sister's not involved in it anymore?
that's what I've done all these years for my siblings, basically get them set up in business. I was the one who got them set up in the adult family home business years ago.
Okay, so it can withstand her leaving.
Oh yeah. Oh yeah.
You sound confident. Okay, so that's good.
It's not a,
Any particular reason you haven't already expanded?
oh, it's, the family is satisfied to a certain point. You don't really want to get it to built where, you know, it adds to the stress. And they like the independence and control.
Lack the independence and control. Oh, you mean of any? Okay.
Yeah, yeah.
I mean, is there any debt on this property?
No, in fact, because, you know, the home's been owned for a long, long time. I mean, if there's anything there, it's very minimal. Yeah, most of it is just equity. Yeah.
Yeah. I mean, it's
You know, Chris, on
it's like, how much is your time worth? And I mean, I would only personally, family or not, I would only do this, like the expansion and the increase in business if I was involved. I mean, so
so I'm actually, Charlie knows this. I'm familiar with, you know, real estate development. I have people that's in that business, and also in the medical, in the healthcare, even in the staffing, we have access to all the medical personnel. But I haven't focused long enough to say, maybe I should. I just sort of, you know, something that's going on the side, it wasn't really a priority until this situation has come up. And then I realized that if I don't make it a priority, who will, right? And because it's such a valuable asset between the two. And those are really our parents, and that's where we grow up, you know, at the end of the day. And my sister doesn't know enough about business to understand even a fourth of what we're talking about, because she's a medical person, right? She doesn't know that. She doesn't know what she's got, other than she knows that, you know, it's big, it's worth over $1 million, whatever, right? That's all she knows.
Yeah, I would just put some structure around an idea that you have, and really look in yourself to see if it's worth the amount of time that you're going to put into it. I would structure it in a way that it makes sense for the family and you included. I would have a little more talking with her about what it is she really wants. I mean, if it's purely just a family play, well, then that's, and likely is what it is, then really play that up. But look, I'm open if you ever want to talk more about this.
Okay, appreciate that.
Yeah, it sounds very intriguing, and it's a trend that's only going up, and you got to find out what she wants. And if it's purely just to help the family and to get out, well, then create a plan that allows her to do that.
So Charlie, maybe Chris, Charlie, maybe we could put our heads together and then maybe come up with a plan. And I mean, I know that, you know, as far as doing the acquisition, the rest of it, whatever, but coming up with the best and use, highest and best use plan.
Yeah.
Yeah.
The existing business and real estate. If we can come up with that, I think we can swing it. I mean, yeah, it's something that we need to do as soon as we can, because, you know,
Yeah, we got the pieces. Brother.
Let's definitely work that out. I'd love to. I mean, I've talked with Charlie individually and Alex. You know, now you and I have, well, actually more publicly, have talked for a good 45 minutes together too.
Thanks for sharing. Sometimes this is what it takes, right? Right time, right?
Well, it's 100%. I mean, this whole network of people have been connected here. I mean, this is what Royal Legal wanted to create, and I'm very grateful that they've created.
Maybe this is a good right place for us to you know, get started and solidify, and, you know.
Yeah. But yeah, look, I mean, I'm going to say something. The majority of the day that I spend talking with investors is often not something that I'm personally involved in, and we're just giving each other recommendations.
Right.
And sometimes we do business together. So I'm just going to throw that out there, Alex. I'm happy to talk to you about this, and I think likely this is just going to be a family thing, but it sounds like something I might be interested in, you know, providing capital for or figuring something out. So let's see.
Okay.
All right, guys.
All right, guys. Well, we've gone considerably over, but it was great to kind of listen in and even be able to contribute kind of my little 2 cents. And we'll look forward to seeing you guys in the next group mentoring. Pete had to scoot out. But thank you so much for all of your wisdom and insight. This was great. And I hope you guys have a great week.
Hey, Cindy, what a way to get you introduced to the community, huh? So it's dynamic. Welcome.
This is great.
Yeah. Good deal.
See you guys.
Thanks, ladies.
Okay.
Thanks, gents.
See
All
you.
right, guys. Thanks.
Thanks.
Take care.
All right. Have a good day. Aloha.